Phase 1. The business cycle weakens. Credit begins to widen. Corporate cash flow worsens a tad and shares fall and volatility increases. I think that's where we've got to now. I think Phase 1, we accomplished, and it started really in about October. Phase 2, the business cycle weakens again. Credit widens more. Cash flow gets worse, as do profits. Tax receipts fall and state pension funds stop buying debt. Big BBB stocks fall and bonds fall even more sharply. Equities fall hard. So I think this is the next phase, and I think it's coming after the summer. We'll wait and see. My forward-looking indicators suggest that Europe has a SESI upcycle right now. There's a bit of stabilization of data. I have a feeling that if I'm right about the debt ceiling or the dollar breaks higher, then I think we're going to start to see Phase 2 come in. When we start seeing Phase 2, we know where this is going, because then the story becomes very clear. Phase 1 was the alarm bells. Phase 2 is strap yourselves in. Okay, let's go on to Phase 3. This is when things get ugly. The baby boomers start to panic to get out of equities permanently. There's downgrades of BBB to junk. The EU banks can't take the funding stress, and the ECB and the government step in. Credit spreads explode. Credit seizes up entirely as pension funds are forced sellers on downgrades. Equities go into tailspin, there are no natural buyers. Credit widens dramatically, offered only, no bids. Junk bond market overwhelmed. Pension funds get into trouble, defaulting on obligations. Big, famous companies are being forced towards bankruptcy unnecessarily. That's the really ugly phase. And that's the one where I think many of us have got a sense that there is an end game that's at the end of all of this. If there is one, it lies in the heart of that. Whether we get there or not, it's going to be a function of what the Fed does and what the central banks do and how they deal with this. And there's many outcomes for that, and it is not going to be a straight battle. But all I do know is these things tend to accelerate much faster. I'm very cognizant of what happened in the UK with Woodford's fund and Neil Woodford's fund, and also with HTO Natexis. These are liquidity problems. And we've talked a lot on Real Vision about liquidity and the lack of liquidity in markets. And if you put in a bad event with low liquidity, you've got a problem.